Hey guys, how's it going? Welcome to the weekly Watch This Breakdown. Hope you all had a fantastic weekend. So we're going to go over Euro Dollar. Going to look at a couple of decent trading opportunities from the last few days of last week, and then we're also going to go over the higher time frame forecasts for both pound dollar and Aussie dollar. So Euro Dollar, quick recap of the higher time frames. We did go over this on the midweek market update, but monthly chart. You can see potentially supply starting to hold now. Obviously, we came on to this really nice level towards the start of the year. We came back into this minor area of demand, right? We tried to push up higher. We failed to take out that high, and we now pushed down and closed not only below the reaction, but we also have that change of character as well. Okay, so that's almost that high probability entry model that we look for, right? Just this is on the monthly chart. We've come into an area of demand. We've flipped and we've chocked. So technically, right, we would be looking for price to come anywhere in towards this range to then look for that entry to then short this to the downside, which, yeah, to be fair, let's see how many pips would that be if you wanted to take some nice monthly entries here with a, nearly 600 pips stop there. Or of course you could refine it to that candle. But essentially, right, we're using that to potentially look for some long-term trading opportunities. If potentially the dollar is going to power up over the next sort of year or so, potentially coming towards these lows. But yeah, there's the argument that this is structurally a weak low because it failed to take out this swing high here. So we can look to target this low. But as I was saying on Wednesday, right, it's kind of that battle between supply and demand. We just ignore structure for a minute where we can see demand starting to hold at the top of the range. But we also did sweep liquidity here. And then we created, that fresh or strong area of demand, I should say, which is holding. So it'll be interesting to see if price does make it down to here, whether this inside bar, this range created demand down here is going to hold, and then we can try and see price push up to the upside, taking out all of this liquidity here. So supply and demand kind of having that battle from the extremities of the range, but really kind of, at least for my style of trading, I'm much more interested in, especially from a monthly chart, really focusing on the most recent price action. And this is reasonably significant for looking for this to cause that bearish move. But of course, we may see that bit of a pullback into this area here, right? That caused the this area of demand to fail and that change of character. So we may pull back a little bit into this range, right? The supply that came in to cause that fail and to cause that change of character before we see lower prices, but of course we don't have to do that. In very simple terms, we've come into supply, we've had a change of character. It's looking reasonably bearish from the higher time frames as things stand. Weekly chart, pretty similar, right? We reacted off weekly supply, came into this level of demand, failed to make a higher high. This was a weak low. We came down and took that weak low, had a little bit of a sweep of liquidity, but ultimately we have now closed below that weekly swing low. So for me, the weekly chart is now bearish and we are playing within this weekly bearish range here. So obviously price can pull up a little bit back in towards these areas of supply or potentially even higher. But yeah, just looking to continue to short this pro trend down into this kind of next area of range created demand, which is arguably a flip zone there as well. So yeah, looking very, very bearish on the monthly and the weekly. Of course, we have just had that sweep of those equal lows, that liquidity and a break of structure. What do we expect after that? We expect a pullback of some sort, right? At some point, we may get that weekly pullback, but of course, price could go a lot lower and potentially mitigate this demand before we see that weekly pullback. But remember, how do we also know when a weekly pullback may be commencing? We'll see most likely a change of character or that daily change of character, right, to initiate a weekly pullback. So on the daily, we don't have any signs of that just yet. Very clearly in a bearish trend. For me, this is all one daily bearish leg, right? These are the swings in price. Just like this, that's how I'm viewing the daily price action at the moment. In last week, we did have a little bit of a pullback, right? We created that inside bar. So technically we took the liquidity from that inside bar, right? Because this would be the down move. That would then be a range, right? Inside bar fails to take the high or the low. Then price breaks up, sweeps that high, and then takes the low there. So, price is pulling back into this very minor area of daily supply at the moment. And we may just get a tap into there and then literally get that next bearish leg to the downside. Or if we start to break up from here and we get that daily change of character, so if we take that high, then that could be the sign, right, that we're getting that daily pullback and potentially that weekly pullback as well, right? But as long as this kind of very minor high holds going into next week, we could just come into this area of supply, and then we start to get our entry model short. Definitely looking to target this as that week low as our first target. Next kind of key higher time frame levels of demand I'll be keeping an eye out on is this daily flip down here, and then obviously we'll be pretty near that larger weekly range as well. As price gets nearer there, we can start to kind of refine this a little bit nearer at the time. The only other thing I'd keep an eye on a little bit higher up is just these buy to sell wicks here, which are essentially kind of that decisional flip zone, right, that took out this high here and that last point of supply. So actually, do you know what, I'll just leave that there for now, but really, I am kind of looking at this whole sort of general daily range. But yeah, this will be the nearest kind of daily target that I'll be looking for price to come down. So yeah, it'll be interesting to see at the start of next week if we just tap into this a little bit deeper and then we go from here, or if we're going to take out this high and get that daily change of character, which will then initiate potentially that deeper daily pullback, and then we can start to look for these areas of supply higher up in the leg. So price action is looking very, very clear from the higher time frames. In my opinion, 4-hour chart as well, nice big bearish swings in price action. We obviously last week came into this area of demand, nothing majorly significant for me. It's kind of one of those areas pretty high up in the leg, didn't sweep any liquidity. It had already previously been mitigated. Potentially it's a sweep zone. Let's have a look. Sorry, not sweep zone, a flip zone. Yeah, so we came into this last area of supply, right? That big swing in price, and then that's what took that out. So yeah, I guess it's a pretty decent flip zone to be fair. So we're just mitigating out the rest of those orders, and then next key level would be down within that daily zone, right, where we have this inside bar, but it's a bit of a clean push. It didn't sweep liquidity, has no inducement, but I'm still happy to play longs from here, of course. But arguably this is a much better zone. It's swept liquidity. That's kind of the origin of the flip. Just refine that to the wick, and then we have this one as well, which is the exact same thing. Sweep of liquidity, and then yeah, ultimately led to that break of structure. So all 4 areas, or 3 areas of demand, I should say, I will be keeping an eye out on coming into the rest of the week if we do push down into here and we do get that next bearish leg. So zooming into actual current price action, okay, sort it out a little bit. We're in a very clear range. So for me, this is my 4-hour swing high. That's our 4-hour swing low. Nice straight push down, so no bullish change of character just yet, and we're very, very correctively pulling back up into these areas of supply. First real decent sign of bearish sensitivity was these buy to sell wicks that we saw price tap into last week, but we may pull up a little bit higher, right? We did come just about into the EQ of that leg, into the premium prices, but if we do push up higher, I'll be looking at kind of this inside bar. It's quite messy price action, this kind of general area, but kind of anywhere within here obviously is 4-hour supply, and then potentially we push up a little bit higher into the extreme, then definitely be looking to see if we can get those bearish price action models. As always, look for ideally sweep into our zone, then look for that flip, right, that reaction there, the change of character and the failed reaction, pull back into the area of supply, and then look to take that short. Or of course, right, always be keeping your mind open to the flip side to that. Well, flip would be a poor choice of words there, but into the what if you have your bearish bias? Yes, it's all pro trend, but we have to be open to the fact of what do we need to see for us to potentially switch our bias to bullish before we potentially get a break of structure. Well, one sign of that would be price comes into supply, it tries to make a lower low, it fails to do so as price then pushes up higher, so then we get that failed reaction, right, and then we would have demand that cause supply to fail, so we'd have a supply to demand flip, and then we can look for price to come into here to take some short-term longs right up to here with the possibility that we could break out higher and then initiate that steeper or deeper daily pullback, I should say. So again, just keep your areas of high time frame supply and your medium time frame as well. Wait for price action to come into there. Ideally we get that super liquidity, flip, change of character. Don't know why this is being so not drawing very neatly. Might be, who knows. Anyway, what I'll do is just draw it a little bit bigger and hopefully that'll be a bit smoother. But yeah, essentially you got your higher time frame and medium time frame level of supply, right? Sweep of liquidity ideally, pull back in, you want to see that reaction so we can see what that flip is, then we get the change of character, pull back into the flip, and then we can look for those pro trend shorts. Or if price comes into it, it tries to make that lower low, but then price breaks up above where the reaction started, we get the failed reaction, then we can know we could potentially, going to see those higher prices. So that's kind of, as simple as I can keep the 4-hour chart. I will be looking for shorts from all of these levels, and then obviously from a 4-hour perspective, we want to target this low. As long as this strong high is held, right, and we can look and we get in shorts, then we can look to try and target at least some of the volume down towards this 4-hour low, and potentially even lower. So that's the 4-hour chart. We drop down to the 15-minute. So we kind of paint price action back a little bit. Did go over this on Wednesday, but obviously we're very bearish. had these nice swings in price, and then we failed to take out these lows here, and then we took out the high, right? So then we were bullish, and this is our swings in price. That was one big leg. Then we came down, demand tried to hold, it failed, pull back up, right? That's the swing high at that point. And then this is the one big bearish leg that we were within, at least the way I see price action on the 15-minute. So from this high here to this low here, this is the 15-minute range. We came into that 4-hour level of demand. We can be nice and patient. We wait for that change of character, right? That was the last minor high, very minor high, but that's all we need for a change of character. Got that change of character, and then we generated liquidity, right? Swept that structural low there. Tapped into the sort of extreme demand, and then we've just been pulling back ever since. So obviously, because we are bearish, you'll get kind of multiple changes of character. It will be switched from bullish to bearish a lot, and can kind of get chopped around when price is just making this choppy range. So obviously just try and stick to kind of those more extreme supply and demand zones. So yeah, we'll quickly go over kind of a couple sort of nice trades on Thursday and Friday, and then I'll kind of finish up just with the remaining forecast for this pair for the week ahead. So yeah, I think we spoke about this on Wednesday, where we got that change of character, we pulled back into demand, and then obviously coming into Thursday, we were still looking for shorts because pretty much from the 15-minute time frame upwards was all bearish. So the first kind of level of demand coming into London, right? So obviously we had already wiped out this very, very minor area of supply, very poorly priced, right? Not a great level at all. Asia chopped around through that and then pushed up higher. And then this was our kind of next or nearest level of supply, I should say, which was a flip, right? We had this level of demand here, price reacted to that, and then that's where we got that last point of demand failing and that 4-hour break of structure there, right? That was the 4-hour low. So as price comes into here, you can look for shorts, right? Pro-trend shorts to then try and take this to the downside. So let's take a look at that now. So again, just to go over the 4-hour and 15-minute, obviously very clearly bearish. We've had that break of structure. We'll pull back up a little bit. So we're not that well priced, but it's kind of the first real area of supply coming into London. So if you like this level and you get your entry model short on your execution time frame, then you can look to take the short. So let's go to the M1 and see what was there. So for me, the first trade entry that happens would have been a loss. So we come into that M15 area of supply, right? And we start to move away with a decent bit of momentum, but we don't get a 15-minute change of character, okay? So the kind of substructure is still bullish at this point. Obviously, we're still bearish because we're within the swing range, we're bearish, but obviously we've had that change of character and we're starting to get bullish order flow to the upside. We come into our area, our M15 area of supply, and we start to break to the downside during London, and in New York, we try to make that internal high on the M15, but what happens is it sweeps that internal high. It fails to close above, so we get that aggressive move in and then that aggressive move out. And then if you look at the M1, what do we have? We have that last area of demand. Price reacts and then it pushes down through, so we get the flip and the chock. That's a pretty strong, M1 setup. Pull back into that area of supply, 2 pip stop. You can keep you well above the high, even if you enter at the distal, even if you enter at the EQ, you would have been stopped out. So in my opinion, that's a very, very solid trade, at least with my trade plan. The main obviously negative confluence is it's poorly priced. You're selling within the 4-hour discount, and the other thing as well is you didn't wait for an M15 change of character with that. So obviously the stronger setup would be, when you get the M15 change of character, there's no other really way I can keep it simple, but for me that would be more than a valid loss that I'd be very happy to take. So that was kind of during, just before the New York Open, but then what happens is price then just takes this high, that's liquidity it needed, and then that's the move that then does lead to a change of character, because remember, you need to keep analyzing price. What happens, we then take another high, right? So we make that high, using wick breaks for chocks, remember, not for structural breaks, and then this becomes that kind of new sort of minor internal low. We then get that change of character, so now the internal structure has switched bearish, right? We've had the bullish internal pullback, but then we get the bearish change of character, so now the internal M15 structure is bearish, which is in line with the M15 bearish swing structure, right, which is in line with all the higher time frame bearish trend. So now you could argue it's all systems go to look for shorts. We create another area of supply, and this is kind of a higher probability time right now to look for the short move rather than kind of trying to trade this initial move, right? So yeah, that was decent. I did actually just want to briefly talk about the supply zone as well on the M15, and this is kind of for that discussion that we had on the Zoom call last Monday about kind of how mechanical to be with how you define and draw your supply and demand zones, right? So remember, we discussed that the truest way you should draw your supply zone is a bullish candle that is then engulfed or closed below the wick, right, by a bearish candle. So in this case, if you were to draw this candle, one, you're drawing it on a bearish candle, preceded by a bearish candle, so 2 bearish candles. That's not a supply zone. It should be the bullish candle and then the bearish candle. But if you were to draw it from here, right, this candle fails to close below the wick. Draw it from here, it fails to close below the wick, and you could draw it from here, and that candle does close below the wick, but it's a bearish candle and a bearish candle. So technically, that's not really the true way if you're being very, very strict. So as we discussed, you can cycle through the time frames, right, to refine it to when you do find that bullish candle that is then closed below. So if we go up one time frame, what do we have? We have the 16-minute where we have it, okay? So we have the bullish candle preceded by the bearish candle that closes below the wick, and that's what we have, and then that cleans it up. And that can be a nice mechanical way of how you can kind of draw your zones and refine it to one candle, and it just cleans it up all a little bit, okay? You don't have to do it, obviously. A lot of times I don't always do that. I can just see this is the candle at the top of the range. Sometimes you can even just refine it to the wick as well. That's another thing I like to do. If it's a bearish candle preceded by a bearish candle, I just refine it to the wick, and generally within that wick there will be that bullish sell to buy, right? But yeah, I did just want to cover that because that's quite a good example of where you can cycle through the time frames just to get your mechanical way of refining your zone. So then price comes into that supply zone. Let's take a look on the M1, what the entry was. So very, very clean, right? You'd obviously set your alert on the distal of the zone or wherever you have your zone drawn. Price comes into it. On the M1 was still very clearly bullish, right? Create this area of demand. We push up into price. Price then comes down. Zoom right into this so we can see it. Price then comes down into our level of demand, and then we react away. It wicks a high, but it fails to close above the high, right? So it's failed to do its job. I'm trying to get rid of the drawings. Do it this way. So it fails to close above the high, right? Demand fails to do its job, and then we push down through and we get the change of character. So why does this decisional not work, and why does it come to the extreme? Well, a couple of reasons, but the main one for me, and kind of the main or simplest one I think you should focus on in this case, if you kind of were looking at this decisional as potentially the flip zone to enter on, is because if you actually look at what happened, right? This is the area of demand. Price comes into our area of demand. This is where the reaction initiates from, right? So this is the base of the reaction. So for the flip to occur, we need to see, right, this reaction go. Whether you need to see a wick break or a candle closure will depend on you, but this is the origin of the reaction, right? So that's where the dotted line is. That's where the failure point that we need to see go. Then price comes down, and you can see that this is the move that causes the reaction to fail. It's already failed at this point before this inside bar supply comes in, right? For me, that's the failure there, and that originated from here. Also, what is this? This is a sweep zone. It took liquidity. This doesn't take any liquidity. It's a pretty straight push. There's no inducement in the leg, and this for me is why this would be the zone you'd want to take in that case, or it has the much higher probability, of price coming up into here. Obviously, whether you entered on the distal or the EQ, you should have stayed in the trade regardless, because your stop should always be above the high, right, no matter where you enter. A fixed 2-pip stop loss would have been on the EQ, or maybe if you went a little bit tighter, you may have got tagged in here. But either way, right, you should have not touched this trade until you've gone to 4R or wherever you take your partials, right, to move to break even, or your structural low goes. So you definitely should have been able to stay in that trade if you entered on that extreme flip zone. There, and that was a very, very tidy trade, which eventually took out, I think it didn't go until the next day, let's say, going into London session or pre-Frankfurt, took out that 15-minute low there. So in that case, very simple setups in my opinion. Kind of that pro 4-hour and M15 bearish trend came into the kind of decisional supply zone. That first trade was a loss, but a very, a trade I'd be more than happy to take again and again. But yeah, if you want a little bit more confluence, either wait for price to come up to the premium or wait for that M15 change of character, which is then what we got during New York, right? We came into supply. And then that's where there was a very, very tidy trade here. And obviously because the M15 internal structure is now bearish, which is in line with the swing structure, you can then look to try and target, that M15 week low as a minimum, with the possibility that we could come down to the 4-hour low. But of course you have to bear in mind that the 4-hour may want to pull back deeper into premium prices before it's ready to take out that next swing low. So that's why you always want to make sure you're paying yourself along the way. Of course, if you're entering this same setup but way higher up in the 4-hour leg, that's when maybe you want to hold a lot more volume and try and target this low, because you're selling from an area in which you're much more likely to stay in the trade long term, rather than trying to assume that the 4 hour is going to form its lower high here and continue swinging down from that level, if that makes sense. Now, one other thing I did notice as well, if you were in this trade, right, something you may want to do, especially when price is coming near the lows, is look out for potential hedges. So potentially you may have been looking at, the price action down here early in the session as well, because there was a really nice big sweep liquidity, aggressive in and out. And what happened, if you look at this price action, because there was an entry you would have been looking at, but it didn't quite give us the entry. Now, if you're looking at a potential entry and you don't get tagged in, always keep it on your charts, because you can use it for information later, right? Because what did we have? We had the flip here, right? We had the reaction point. So actually there was an entry if you did take the whole range, but it didn't meet my plan because I wouldn't have got tagged in. Don't really like going above a 2 pip stop on the M1 chart on euro dollar. So I'll show you what I mean. Right, sweep liquidity, aggressive in and out, there would be the flip. But yeah, my entry would have been here and definitely would have been tagged. But if you take the, just the actual single candle, right, and then you can draw that across, what do we have? We have that reaction point away from it. So if you're in a short trade and you're looking for potential hedges, and you're just seeing, okay, when does that bullish order flow start to kick in? And then we have, all right, our area of supply, where you take the whole range of the single candle. That will be dependent on your style. We get the reaction point, and then we get the failure of supply, and then of course anywhere within the range, or you can take the refined candle, and then that would be your hedge against your pro trend short position. And that was a pretty tidy setup there. 1.5 pips stop is more than enough to get long on the distal. But obviously this is a lot more aggressive. You're trading against the trend, and the other reason why it's aggressive is because you're only entering on a flip and you haven't yet had that M1 chock. So the M1 is still bearish at that point, and you're entering before the chock, okay? So that's a much more aggressive trade. But yeah, there was definitely a potential hedge there, depending on how you like to manage your hedges. That, yeah, I did just want to point out. So let me clear all of that up a little bit. And then we'll go into Friday's price action. So get rid of those and then scroll across. So if we take a look at the M15, we obviously had that change of character. We came into supply. This is when you are then short, and you're ideally hoping that those 4 hour lows are going to get taken out, right, with any remaining volume that you may have left on your short. So as we're coming into London, right, there's not much going on at this point. Not really good area in which you want to be jumping into any trades. Short trades, potentially could have looked shorting from that supply. Not the most well priced in the world. But then what do we get? During London session, we get that M15 change of character. So now the internal structure has switched bullish. But not only is it just a change of character, look at the amount of momentum that's coming in, right? Breaking all of these, internal range liquidity levels, right? A lot of momentum to the upside. We pull back, we kind of mitigate this M15 buy to sell candle here, right? Nothing that obvious, but you can see what's going on, right? Flip zone there from that range. Price comes into it, mitigates it, and now we have another internal break of structure, right? So that's kind of two. It's really showing that bullish order flow starting to hold in, and now you can look potentially at this area of demand, right, to look for a long, just to keep following the M15 bullish order flow until we get that M15 change of character to the downside again. You can look to play long plays up into the 4 hour premium levels of supply. So let's take a look at that coming into Friday's price action down into here. So obviously I think this was NFP, right? A lot of volatility, and then you would have your M15 extreme level marked out, and now obviously you can refine this to the M1, right? Obviously comes down into extreme, or you can just be happy with your M15 zone and just wait for your M1 entry model to set up. So let's use a bit of bar replay here before price comes into the zone and talk it through. So obviously you just have your alert set on the zone of, right, so we've come into the zone now be waiting for supply to fail and ideally to get that M1 change of character. So we're pulled into this M1 level of supply here. Is this going to hold, and is it going to make a lower low? Just about wicks that low there, so supply is still in control at this point. We'll back up into this area of supply here again. What we're going to do, okay, now we're still clearly bearish, right? M1 structure has not switched bullish. We have now taken out these M1 equal lows here, drawing out liquidity, but supply is still holding, right? M1 structure is still bearish. So now let's see, is the M15 demand going to hold? Just about holds. Seeing a bit of an aggressive move, but supply is still in control. Okay, we're coming into this most recent area of supply here. So really, if this M15 demand zone, this blue zone, right, if this is going to hold, if this is the level we want to trade from, it has to hold now, right, because it's mitigated those last bit of orders. It has to now switch bullish. We want to see supply fail, and we want to see ideally a change of character. But of course, you don't have to wait for that change of character if you're happy to just play the flip. So we've come into our M1 level of supply. We're seeing a bit of sensitivity with that wick. All right, so there's kind of your bearish move. We're pushing up higher. Another bullish candle. Then we break up higher. And then are we going to get a change of character as well? And we get the change of character. So there's your M1 chalk. Right, that's pretty obvious. But where is the M1 flip? Well, they're kind of all bullish candles. So for me, there's nothing really that obvious. But the first reaction point for me when we came into this candle, right? Not this candle, but this candle here is where the reaction happened, because we came in and then we saw the reaction of that candle happen, right? As it was bearish, but then it closed bullish. But it's that buy to sell price action is what on the 15 or the 30 second, that's where you would see that bearish sell to buy that then goes on to break the highs, right? So that's where your first reaction is. And that's where the reaction fails, right? This is the first reaction. And then when this candle closes above, that's the failure point of the reaction. But what you're doing is you're reading the 15 second or the 30 second on the M1 time frame, right? And then that would be your flip and your chalk, and that would be where your entry is. If you are happy to either trade the second time frame or use the M1 fractal refinements like this to trade, you don't have to, okay? But that is the way you could do it. So if that is in your plan, that for me would be a valid entry, and then you'd be in this position here, okay? But maybe you want to be, just going to bring this back a little bit. Maybe you want to be, there we are. You know, you might just want to look for those only real obvious trades on the M1 and be a little bit kind of, not stricter, but just a bit more conservative, and you're not so keen to kind of trade these real fractal refinements. So you wouldn't necessarily be looking at the trade. So I'm just going to hide the risk reward tool for a second. And you're looking for a more obvious M1 reaction, right? There's obviously all these M1 supply points on the way, right? Here, this inside bar as well. You don't have to draw them all on. You can just keep it really simple and go, just sit on your hands and just wait for that reaction to kick in. Wait for that bearish price action to kick in so you can see where there's some valid supply. Okay, now we've had two pretty strong bearish candles. This inside bar definitely, looks like it was a decent area of supply on the M1. So now we have our reaction point. So what would you want to see? We've already had our chalk. Now, ideally, we want to see the point of supply fail, right? As long as it doesn't take out the low, then the supply has failed. So we'd be waiting for either a wick break or a candle closure above. This would be your first entry if you're happy to take the fractal refinement. And then you could also be looking to scale in as well, right? So now what do we have? Now we have that supply clearly failing. We had the reaction. It failed to take out the low. It failed to put in its lower low. We now have this point. So how can you enter it? Well, you can either enter on the entire sell to buy range. You could enter down here on the extreme, or you could enter on the decisional. So nothing that great here. There's no real clear sweep of liquidity for me to call out a clear sweep zone. Yes, this candle here, right? It took out these wicks, but they're all fractal kind of liquidity sweeps, and this is where liquidity can get very subjective. And we spoke about this a bit on Monday as well, right? Where we want to kind of see those obvious ones, right? Where it clearly takes a low out like that, or these equal lows here, rather than kind of, arguably trying to define every little fractal refinement there. And then nothing in here really takes out a low either, in my opinion. So this extreme would be a valid entry. We know EU, it's not a massive kind of liquidity pair compared to a pair like pound dollar, and arguably as well, when we had this extreme, what happened? Price moves up, right? Came into this level. You can see on the lower time frames there would be an area of supply because price reacts. It comes back down into this area of demand that was created, that then provides price to then move up again. Then we obviously mitigate whatever was in this wick, another area of supply. That's why this inside bar forms, because price pulls back a little bit, and then the decisional demand steps in, right? And that's where we see that true last point of demand step in to cause supply to fail, and that is why, in my opinion, most likely this would be your best entry. Kind of viewing price action from that standpoint, whether you take the whole kind of inside bar or you take the top of that wick, up to you. And that would be a much clearer M1 entry if you don't have kind of the fractal refinement entries like that within your plan. So this could be your first entry, or it could be your scaling from this initial entry here. And that was kind of let's see if we get tagged in, generating some liquidity, and then we get tagged in, right? And then let's just play this forward a little bit. Because at this point, right, this is where you have to really kind of keep structure on your medium time frame and your higher time frame really in the back of your head when you're managing these trades, and don't start swinging for the fences, because yes, the internal structure on the M15 is bullish, but the M15 swing structure and the 4-hour swing structure is clearly bearish. at this point as well, we have just rejected this 4-hour buy to sell wicks with quite an aggressive sort of reaction. So, you don't necessarily want to be swinging for the fences. Also, it's Friday. At this point, we're kind of coming into the tail end of the London session closing, right? Obviously overlapping with New York. Volume's going to start dying out, especially if you took both of these trades. At that point, your 10R, you may want to I would advise take a heavy amount of volume off at that point. Pay yourself, have a good week, rather than kind of trying to swing these, up towards the M15 high, which yes, could get taken out, but you are trading against, that real high time for momentum, and you're going to have to hold into the weekend. So, it's kind of how I would potentially look to manage those. Obviously, try and hold a little bit of volume. There is a possibility we could go a bit higher. But yeah, I think in the end, price did pull back a bit lower. Yeah, and you would have been eventually stopped out on both of those positions there, holding this kind of level of demand. So that kind of was some real decent trading opportunities, kind of the cleanest opportunities that I saw the tail end of the week gone by. So going into this week ahead, quick forecast, kind of cover the higher time frames in depth. They're pretty simple in my opinion, right? Very much bearish. We have these unmitigated areas of 4-hour supply that I will be looking for shorts to take, with the idea that we can target this low. But like I said, right, keep an eye out on that. From that initial 4-hour reaction, if price fails to kind of go lower, and then we get that closure above, right, that reaction point, then demand is still in control at that point. And again, same thing, look for shorts from here. But if we react and then demand holds, right, we close above the reaction, then potentially we are going to see that 4-hour bullish trend change, and then we are going to get that deeper daily or potentially even a weekly bullish pullback, right? And that's as simple and clear cut as you need to keep your forecasting, really, in my opinion. From the M15 perspective, that's my swing high, that's my swing low, so we're clearly within that bearish range, kind of within the premium prices of this M15 range now. The internal structure is still bullish, so you could keep it very simple, and you could just wait for these unmitigated areas of demand to be hit, and then wait for that M15 change of character. Then the M15 internal structure is then bearish and in line with the swing structure, and then you can look for your shorts, right, to then take out these very poorly formed corrective lows here. But at the moment, the internal structure is kind of within this range here. So coming into Monday, you may want to be a little bit more patient. Ideally see this high get taken, then get the change of character, and then we go. Or potentially we could go from here, right, come into supply and then go from here. Or you could be a bit more aggressive and literally just start to see if this kind of bit of bullish order flow continues to hold, and start to try and push these prices higher if you are that way inclined. And then yeah, you can just see the kind of M15 levels of supply I've got drawn on. My favorite level is probably this level here, kind of just following the mitigations from the extreme. So that's the extreme swing high, kind of come down, mitigate that level of supply, come down, mitigate that levels of supply. This is kind of almost a big sweep, right, of this liquidity, kind of that FU sweep. It's within the 4-hour level there, so yeah, this would be a pretty decent level to short from. But I'm personally more than happy to take shorts from any of these supply zones, but all I really want to see is just get that M15 change of character, and then yeah, all systems go to then try and look for those pro trend shorts down towards the lows. But as always, don't be blinded to what's happening. If bullish order flow continues to stay, right, don't be afraid to take longs as well and push price a little bit higher. You may just need to be a little bit more aggressive with your management, because you obviously are still counter the M15 and the 4-hour trend at that point. So that wraps up EU. Price action is looking really clean at the moment. Yeah, excited to see what we get coming into next week. So let's take a look at pound dollar. Just going to take a sip of water. Okay, so high time frames we kind of covered on, I know we didn't cover that actually, my bad. So monthly time frame, long term we're looking pretty damn bearish, right? Had this big sweep of liquidity, which is a pretty bullish sign, right? We'd expect what we want to trade away from the sweeps, usually expect that movement out, potentially mitigation, and then we may break out to the upside long term. At the moment, we're coming from the top of this range here. Obviously, all the dollar pairs are kind of starting to see that now, right? Those higher time frames supply starting to kick in, and we are starting to see that bearish price action. We did actually have a monthly change of character there as well, because it just took the high, which means you have a minor low here. So the monthly has now had a change of character. We have this kind of decisional demand zone here, or potentially we may want to come down to mitigate something within the wick down there. Weekly time frame coming off this sweep zone up the top, tried to make a higher high that then became a weak low because it failed to do so, and we've now taken out that low, and it looks like we are starting to pull back. Now I think previously in the last few months I did have this kind of mapped out as my weekly low, and this is the swing high. But something I always say, and something I definitely believe you should always do, is delete all of your analysis from time to time. Something I did the last week or so, and kind of just went through price action, just made sure, do I have everything kind of mapped out the way, my highs and lows properly. And if we look at this kind of, let me zoom in a little bit. So you can see here, right, we take out, so this for me would be a push down, that's the pullback. We come down here, we fail to close below the low, so that would still be the swing high. We then get that higher high there. So at this point, this would be my low, that would be the high, we get a pullback there, and then we get a movement here. So that would be my low, fail to close above. So then we break down, we pull back, right? So that's my swing high. Then we break down, so we get that breaker structure there. Now if we draw this across on the highest point, we actually fail to close above that high. So if I put my mouse on that candle there and then look at the top left, the high of that is 978. And then this candle here, where did it close? 941, right? So that's 3 pips. That closes 3 pips below this high. So that for me is not a break of structure. So we're still bearish at the point. All right, so this is the bearish swings in price. So then we come down here. That's the swing high. We failed to obviously close above that high again. So essentially that's the swing in price. So this then means that this is my swing high. That is my swing low. So when we take this break of structure and we switch bullish again, it's the lowest point, okay? And that continues to move, obviously. So if I get rid of all these orange drawings, this for me is one big weekly swing leg now. And yeah, that's essentially how I've arrived at this point of this is the weekly range we are playing within. So there's obviously some levels of demand within here, but especially within this wick, which is probably, are we reacting to that already? Yeah, starting to see sensitivity too, but nothing that clear cut. I'd kind of rather drop on the lower time frames with that. This is kind of the real next obvious weekly level I'd be looking at, or this kind of whole range here. We can dive into these levels even when price gets there. But yeah, internal structure is obviously now bearish. Now we've taken out that low. We can see supplies starting to hold, right? Supply starting to hold. Another break of these lows here. So just probably continuing to expect that dollar strength with the current price action, potentially targeting down and towards the discount of this huge weekly range. Daily chart, we were stuck within that range for pretty much the whole first half of the year. This was that kind of last daily low. We've now finally come down, clearly broken below that low, right? We have this decisional sort of flip zone. Nothing amazing. I don't massively love this as a daily zone because it didn't really take anything out, but nonetheless there's a clear flip there, right? Flip there, got the daily break of structure to switch bearish. So we're just tapping into that zone on Friday, potentially looking for a deeper mitigation and then look to target that week low, right? If it fails to take out the high. But remember, for me, this is currently looks a bit weird, right? But this is the swing high for me, and this would most likely be the swing low. So even if we start taking out these daily highs, for me the daily would still be bearish at that point. It would have to close above this high at this stage for the daily to switch bullish for me. So yeah, price action is quite spread out at the moment on daily or on the higher time frames on pound dollar for me. But yeah, that's just the way the price action is. So keeping it pretty simple, don't need to get too complicated with the forecast. For now, looking for price to react from this supply zone and get lower. But of course, just like I said in euro dollar, if we come in, right, we fail to put a lower low and then we close above that, especially if we kind of get that change of character as well, then definitely be looking to take this higher and potentially look for price to come into those higher levels, right? So 4-hour chart, what do we have? Well, the swing structure on this is a little bit, we'll go through this because like I said, because the daily chart was that massive range as well, the 4-hour chart, the swings are a little bit spread out. So we took out these lows, we then came down, we had this pullback here, right? Then we took out this low, so we were within this range. Then when we took out this low, this was the highest point, right? So that's the swing. Then we switched bullish, so that was my lowest point before that high got taken. Then obviously we pulled back. So then we were playing within this massive 4-hour range here. That price was stuck in for a few months, pretty much the whole tail end of summer, right? We came down into the extreme level of demand. We got a change of character and it looked like we were then going to try and make that higher high, but then supply here, right? This range supply here held. So let me get rid of these drawings so I can keep it a lot clearer. So you guys can see exactly what's going on. You can see it with these dots as well, right? But essentially this is the swing we were within. That was a higher high. Then we came in to try and form that higher low, but we failed to take out the high. So then if I zoom into here, once we started to see demand, right, the internal demand fail, and then we got that break of structure, that internal break of structure, and supply is being in control. That was a very good sign that this was then going to be that weak 4 hour low, because it failed to take out the range high, it failed to make a higher high, and this is just going to be used for liquidity. So price does come in, it mitigates this extreme level of demand, but it's just a mitigation to do what? To generate more liquidity, right? To generate those equal lows for price to then take out. So we get the flip, we get the sweep of liquidity, and that weak low gets taken out, and then eventually we get the 4 hour breaker structure, the daily breaker structure, and now the 4 hour and the daily are now confirmed bearish for me. But because this is where that 4 hour swing was, right, that high, and then we ranged for ages before we got the breaker structure, that means that the current 4 hour range for me is this high here and this low here, and then that would be my daily low, and this would be my daily high all the way up here. So you can see, yeah, pound dollar is very, very spread out at the moment. But yeah, that's just the way it is. So that's why I have my premium discount tool drawn all the way from this high up here all the way down towards the low, and we are coming slightly up towards there for now. So some of you may have your swings drawn a little bit different, and that's more than okay, but just kind of wanted to talk through my thought process there on pound dollar. So yeah, last week we just about came into this daily range, or this 4 hour buy to sell, that broke the low there. Obviously we had that 4 hour change of character as well, so the internal structure is still bullish at this point, right? We've come into demand's holding, and we are starting to break up higher, but obviously we failed to close above this internal high here, so we're starting to see signs of bearish pressure coming into this high time frame level of supply. So if we can get that 4 hour change of character coming into Monday, then yeah, definitely we can then start to look for shorts to then try and take out this weak low here. But just like I said on euro dollar, right, if we come in to these levels of supply and then we fail to put in lower lows and demand just continues to hold, we get a failed reaction, then potentially we can look for that daily change of character. Then we'd get the daily supply failure, right, flip into demand, and then we can look for that deeper pullback. But let's keep it simple. Pro trend shorts from these areas anywhere within kind of this daily zone, I'll be more than happy to take those levels short. And then finally taking a look at the 15-minute chart. We do actually have some bearish price action already, so actually I'll show you my 15-minute mapping here as well. So as you guys know, I'm a little bit more loose with my mapping on GU compared to kind of EU and AU, just because the swings tend to be, I just find it's a little bit better if you kind of zoom out a bit more with GU. The swings are definitely a lot bigger, so for me that would kind of be my last, that's one leg for me on the M15 on pound dollar. So then we switched bullish when we took out this high, pullback, came up, decent pullback there, right? Another break of structure, we just about closed above. So that was the swing low, which you can then see we then switched bearish. And then coming into the tail end of last week, we tried to break up above. I believe this was NFP, right? But we failed to close up above. So then we zoom into there, right? So remember, this is the swing high. We are now bearish now. This is the bearish break of structure we've had. So now the M15 swing structure is in line with the higher time frame swing structure. We failed to close above. We mitigate higher time frame level of demand, the daily and the 4 hour demand. We get our change of character, and then we pull back into this inside bar supply, and then we've had another minor breaker structure there. So yeah, pound dollar is looking pretty bearish from the internal structure already. So yeah, it would be more than valid to start to look for sells coming into next week to try and trade this to the downside. But yeah, ideally you want to see this low really go, because we could come down into these levels, right, and potentially push up higher at this stage. But that's a pretty bearish sign, in my opinion, to kind of start looking for shorts. But I'd be more than happy to look for longs as well in case we do push up higher in towards these zones. But yeah, price action is looking pretty clean. I think we will continue to see some dollar strength over the next few weeks as things stand. And then finally, let's take a look at Aussie dollar. So starting on the monthly time frame. So this is quite interesting actually. It's kind of just painting the story back a little bit here. Obviously on forex.com the data doesn't go super far back, unfortunately, but to be honest, it's not a big deal, right? So kind of look at this structure. We came down here and we have obviously this area of demand where price came in, and then we had those buy to sell wicks, right? Kind of that very last decisional area of supply. So here, right, the buy to sell wicks, price pushes down, comes in and mitigates those. Then we come down into here, right, we sweep that liquidity and we get a change of character coming off this extreme demand zone down here. So we tap into demand, we get a change of character. This was kind of that last solid mitigation, right, in the leg down, right? We had that pullback into demand, change of character. So it's kind of this high that's going to hold if supply is going to stay in control. And that's exactly what happens, right? Is sweep all of this liquidity into supply. That kind of last series of supply zones holds. And then we get that break of, actually I think this high just gets taken, so then that becomes a low, and then we get our change of character. We create our next sweep zone, that monthly sweep zone. Price obviously came down and swept this monthly low here. We pull back up, taken out all of this internal range liquidity, tapped into our supply zone, so you can see supply holding, right? All of these levels of supply are holding, and now we've pulled back into this level of monthly demand. So for me, the monthly chart is still very much bearish, right? These are the swings in price. So from a structural standpoint, especially that we've failed to take out this high here, from a structural standpoint, we should expect a lower low, right? And this should in theory be a weak low. But I'm always cautious with that, right? When we have such a major sweep of liquidity like that, kind of like the pound dollar sweep, right? Starting to take out these minor levels of supply, or these lower highs, starting to switch bullish. Potentially, right, this could just be a reaction point, pulling back into this level of demand, and then if we push up, we get that closure above, right? Not only do we have that flip, right, and then we can look to trade this, but then also all these areas of supply that have been holding have now failed. Demand will then clearly be in control, and then we can start to look for these much higher prices with the Aussie dollar long term. So kind of in that battleground, right? But I would say overall the swing structure is bearish. These are the more prominent levels of supply, and this is kind of, this is a level of demand, at least from a monthly perspective, kind of in the middle of no man's land. All it really did was take out this very minor level, or arguably it's a flip zone, right? But nothing massively significant in my opinion. So yeah, this could just either be a reaction point to generate liquidity to then push lower, or we could see that high low demand could start to take control. That's what I'm trying to say. And then, right, we could take out all the supply and go higher. So it remains to be seen, but that's kind of the two ways I would be viewing that. So weekly chart, right, we can see price coming into that supply zone. But again, like pound dollar, it depends on how you view a structure. If you're a little bit more loose, or if you're a little bit more tight. If you're a little bit more loose, that's kind of almost one move down, potentially even there. And then we switch bullish. And again, it's going to depend, is that one leg for you, or do you kind of classify that as a decent pullback? I tend to be a little bit tighter with my structure with Aussie dollar, kind of a bit more similar to euro dollar, and I would classify that as a break of structure. That is another pullback, so that would be another break of structure. This one's a little bit trickier, right? It's a bit more of a minor pullback, so I'd be more willing to classify that as the swing leg. That's just a change of character. So for me, that's my weekly swing high, that's my weekly swing low. Now we've come into our area of demand. It's a sweep level of demand as well, and we've had a really nice aggressive in and out weekly change of character, pull back into that level of demand. So in theory, at least from a weekly chart perspective, this should be the move to start seeing higher prices. However, like I said, in the monthly chart, especially as we're coming off those major levels at the top of structure, this could just be a reaction point to then generate liquidity for price to then come down to those lower prices. So I am bullish from a weekly chart perspective, but I am just cautious, right, that this could just be a short-term reaction to come lower. Daily chart, very much bullish for me. Excuse me. Throat is starting to kill me for some reason. So we had this flip zone, right? We were looking at this the last few months. Price came down into the sort of the buy to sell wicks of this last point of supply that flipped to demand, which we came in. I am still cautious that we do have the sweep zone below, right? That fractal refinement that we could come lower into, but this is very, very clear price action. For me, that counts as a swing high because I am, like I said, a bit tighter with structure, like euro dollar on Aussie dollar. We came down lower. Very, very nice aggressive movement in and out, that big V shape. That for me is a clear break of structure to form that higher high. Very clean decisional demand zone, which price has not come down into, but of course it does not have to, right? But there is a possibility that this could just be a fake move to generate liquidity to come down and lower before we see that real move, okay? So definitely still valid. I will be keeping an eye out on that. But we have now had a sweep liquidity. We've had another change of character again. So this could be the move that we need to see to take out that weak daily high. So let's take a look at the 4-hour chart. So yeah, if we look at the 4-hour swings, I think it's pretty much the same as the daily chart at this point, because we had these as the 4-hour swings, right? That was the pullback. That's one move down for me. So that's the swing low, which means when that low gets taken, where's the highest point? That's the 4-hour swing high. And for me, this is all one push down. I don't count that as a swing pullback. So because that's all one push down from this break of structure, well, that means that my 4-hour swing high must be here, right? So then when we get that 4-hour break here to form a higher high, this now is my lower low. My this is my 4 hour swing low, that's the 4 hour swing high. So this is the 4 hour range that I have priced within, which for me is the same as my daily range at the moment. Okay, so the 4 hour and the daily range are both the same for me on Aussie dollar. So it's quite a big range. Obviously price pulled all the way down, we generated these big equal lows, we then swept those equal lows and we got a reasonably aggressive move away. I wouldn't have had this drawn on, but you can see when price moves away, you can go and investigate, does it make sense what it reacted from, and you can either just literally take the whole sell to buy range like that, and that would be valid, or you can be a little bit more refined and you can see this flip zone here, right? Whether you took the whole bearish candle, it doesn't really matter. What you're looking at is the decisional sell to buy wicks that then took out the high, got the 4 hour change of character and took out the supply zone. That's obviously what prices then come back into. But the internal structure, the internal 4 hour structure is still bearish at this point. Right, supply has been in control for a pretty long time, for a good few weeks, pretty much the whole of September. We come into this last point of supply here, we react, we fail to take out that low, right, and then we push up higher. So now what do we have? We have a mitigation of 4 hour demand, we have a flip and a change of character. So now we're really starting to see potentially that bullish sign that the 4 hour and daily high low may be forming. Of course we could come lower, but we don't have to, so this could be the high low forming. We have a change of character, we have a flip, we come into another area of supply here. There's a 4 hour area of supply that I've just refined to the 1 hour. Price pulls back into our reaction point, and this is kind of where you have to see, okay, is demand going to take control now, or is supply again going to stay in control? But what happens? We get another flip there. Now we've had 2 breaks of structure. This for me is where demand is now starting to take control, right? Supply is now failing, right? Mitigation, but now we've broken up above it. So this for me, I would say demand is in control, and that means these old supply points simply just become reactions for pullbacks, right, into levels of demand to then try and get those higher highs from here. And then again, old areas of supply here, we can just look as reaction points for pullbacks and so on and so forth, whilst demand is in control. And that's, yeah, pretty much as simple as I'm keeping it. So just be looking for price to either literally continue from here intraday or potentially pull a little bit deeper into these levels. But remember, this is the whole 4 hour bullish range we're within. So you can start to dig in and pay a little bit more attention to the internal structure and looking at these swings, right? We clearly have taken out this high now. So for me, we are bullish, and we can look for these levels of demand to start to hold to see if we can then target that week 4 hour and daily high with up there. But of course, as always, if we start to fail, right, and you start to see supply holding, then you can look to target those lower prices. But yeah, for now, coming into the week ahead, my bias is definitely bullish. So let's take a quick look at the 15-minute time frame. You can see, right, the swing structure here, bullish, right? As you can see, I'm a little bit tighter with the structure here, kind of like euro dollar, pull back here, and then we're within this large range. We did switch bearish, but then that was short-lived. We mitigated this 4 hour area of demand, and then we switched bullish again, pull back there, sweep of liquidity, created a sweep zone. That was our next range. So then there was a lovely trading opportunity there on Friday, and then we broke up structure to form that higher high during NFP. So very, very simply, this is the bullish M15 range that price is within for me. So really, ideally, you'd want to see this fail and go, and then you can look for those kind of pro-trend, not pro-trend shorts, but that would be looking for price to come down into lower prices, into that 4 hour zone. So you could look for shorts at the start of the week, right, if we got that. And then this is where we'll be looking for really those kind of high probability pro 4 hour and daily trend moves to see if we can get that higher high. But of course, if price were to come down that low, the M15 would have switched bearish at that point. So yeah, I try not to get too kind of far ahead with M15 forecast, because obviously, to be in line with the 4 hour chart, the M15 is going to change trend a fair bit. So coming into kind of Monday's price action, Monday and Tuesday, we're within this bullish range. Ideally, right, sweep this liquidity, come into here, get our M1 entry model, and then yeah, look to target the high and potentially even higher, and look for that 4 hour and daily high and see if we can push prices higher. But kind of the point I was trying to make is I wouldn't be too surprised if the M15 did switch bearish, just to kind of get down to this 4 hour level of demand down here to form that high low. But of course it doesn't have to, and there's some nice refined M15 zones within here, right? We have this M15 flip zone and the extreme sweep zone down here as well, nested within that 4 hour zone. So kind of just to quickly summarize Aussie dollar, we've pulled back into that monthly and weekly zone. I really like the reaction obviously we've got the weekly bullish change of character, which is the daily bullish trend change. So the daily and the 4 hour are now bullish, coming off a very strong higher time frame demand zone. But we do have to be aware that we are coming off very strong supply zones, and this just could be a short-term reaction to generate liquidity for price to come lower. But until that happens, for me, all signs are bullish, and I'm more than happy to look for longs to start to try and take out this week daily and 4 hour high, as things stand. So that wraps up the breakdown for the week ahead. Hope you guys took some value from that, and I will see you guys in the next one. Cheers.